Hey there everyone, and welcome back to the channel. My name is Brendan from the Crypto 101 team, and in today's video, I'm going to be sharing 3 of my favorite advanced charting techniques for crypto trading on TradingView. And it doesn't matter if you're brand new to trading or you're an advanced trader, I think everyone is going to find value in the 3 things that I have to share in this video. And spoiler alert, there is a 4th honorable mention that I want to include as well. So without further ado, I want to go ahead and switch us over to a screen share here and show everyone what TradingView looks like. Now, at first, you're going to say, hey, I don't know what TradingView is, but after we load this up, you're going to say, oh, okay, I've probably seen someone use this before, whether it's us over at the Crypto 101 team, or maybe someone else on the internet as well, because when it comes to TradingView, they are the go-to charting service for just about every asset. And I'm not talking about just crypto, I'm talking about everything. You look at bonds, stocks, equities, metals, commodities, crypto, you name it. TradingView is the go-to software to look at all of this. And so what we can do is we can not only view the price and what's happening over here, but we can get a lot more detailed in our analysis and how we actually trade these assets. So I wanted to go ahead and share my top 3 advanced techniques that I like to use on TradingView that you might not be able to use on some of the other softwares or exchanges that you all are used to. So number 1 for me has got to be the moving averages. This is something that you've probably heard people talk about, but when it comes to moving averages, this is just one of those things that, especially in larger, more traditional assets and larger cryptocurrencies in general, we see crypto respect and use the moving averages so frequently. On top of this, we can also use the moving averages to really tell what the trend is doing, the overall health and state of the market. Is price trading below all the moving averages? Is price trading above a lot of the moving averages? Well, we can deduce whether something's in an uptrend or a downtrend really fast, and the overall health of that specific crypto just by looking at what the moving averages are doing. For example, if the price of an asset like Bitcoin over here is trading and bouncing off of the moving averages, well, we can see here it was trending below it and below it right over in here. And as soon as we cleared all 3 of the moving averages and we got back above all 3 of them, well, the trend reversed and price started going back to the upside. So now that we are above the moving averages and we're holding above them and we're trending upwards, this is a good thing to see. You could say the opposite over here, that when price starts breaking below all the moving averages, it can tend to be a bad thing. And that's given us some indication in some previous market cycles when this happens. Now, we're not going to do a full-on course here about what this means, what death crosses are, what golden crosses are, and everything else, but I think moving averages are essential. Now, personally, my favorites are the 20, the 50, and the 200-day moving averages. On my chart, the 200-day moving average is yellow, the 50-day moving average is this pink or red, and the 20-day moving average is the blue line. So by having a short-term, a mid-term, and a long-term moving average, I can see what's happening in just about all the different trends and time horizons, and I can see what sentiment looks like on both a short, mid, and long-term perspective, and how that's correlating to the active buyers and sellers in the market. So that is tip and trick number 1. Technique number 2 that I wanted to talk about was an indicator called the Relative Strength Index, or the RSI. This is where it's going to get a little bit more advanced here, because when it comes to indicators, you have to go up, and I guess even with the moving averages, you have to come up to the top of your chart, click on indicators, and then you can type in RSI, or Relative Strength Index, and it's going to come right on up. Now, I've already clicked on mine and I've already opened it up, but if I go and I look at the Relative Strength Index over here, this is a very, I would say probably one of the best indicators in my opinion, because what this does is it measures the relative strength of the market. And the way that this works is that typically over a given period of time, the default is a 14 period. So if I'm on the or if I'm on the daily chart, it's over 14 days, but it averages and it takes into account a lot of the price highs and lows and buying and selling data. And it essentially plots this onto a chart where you can see overbought and oversold territories. The reason that I like this so much is that because even when prices are moving, you can see, hey, are prices moving up on lower momentum? Are they moving up on weaker momentum? Or the opposite of that, are prices coming and are they bouncing and rising off of higher momentum? And so you can see where the bulls and bears are weaker even if price is pushing up higher or lower. So you can see where there is relative strength in the markets, regardless of what the price action is doing. And that's why I like to use this relative strength index so much. Now, I've color coded mine. When you first load up yours, it's not going to look identical to this because I've changed some of the shading and color, but the overall picture will look roughly like this. So the relative strength index is another one of my favorite tools here in the crypto market, and it's one that I like to use quite frequently to get a bigger and better understanding of what's going on. Now, special technique number 3. This is arguably one of the most important ones, and it's not an indicator, it's not on the charts, but it is essential for trading crypto, and that is the risk versus reward ratio. When it comes to these, we can go over here to this little projections tab, and we can put both long positions and short positions to see what is going on with the chart and what we want our trades to look like. So let's just say that I want to go ahead and place one. I click on it, I click on my chart, it places it. Now what I can do is I can adjust this. So I can look over here and say, well, Bitcoin made a nice little low over here. What I want to do is I want to go long. So I'm going to put a stop loss right below this previous low, and I'm going to put a stop loss there. Now, I want my entry to be, roughly somewhere at the bottom of this range, maybe a little bit lower, around, let's just say $117,500. So I'm going to put my bottom line at my stop loss. I'm going to put this middle line where the green and red meet to be my entry. And then I'm going to put the top of the green line up here as my take profit. So I have a stop loss, a entry, and a take profit, all three. So what this does now is this calculates it for us and says, okay, well, based on this data, what it does is it divides our take profit by our stop loss, and it gives us this risk versus reward ratio. So it's going to say, hey, if you enter in at around $117,500, if your stop loss is at $14,500, and if your take profit is around $128K, well, what that means is that you have a risk versus reward ratio of 3.5. When it comes to trading, a lot of people don't even think about a risk versus reward ratio. They just say, oh, does it look like a good opportunity or a bad opportunity? And then they get in and they might have a take profit and a stop loss, but they don't have a proper risk versus reward ratio. What this means is that if I were to win this trade once, it would pay for 3.5 losers. Let's just round it up here. Let's just make this number a little bit bigger. And let's make it a 4.0 risk versus reward ratio, as it says right over in here. What this means is that if I win this trade one time, it would pay for 4 losers. And risk management is essential because when you're trading, you should try to aim for, like, at bare minimum, a 2 to 3 risk versus reward ratio. Because if you're not doing that, well, it wouldn't make sense to have the opposite effect where, 4 winners have to pay for 1 loser, right? You want 1 winner to pay for multiple losers, typically. So that way you can have even a 50% win rate and still be pretty wildly profitable. So what this does is this gives us structure. This gives us a plan, and it helps us stick to that plan and hold ourselves accountable on where the important levels are. And it kind of helps remove emotion and bias from the equation by just saying, okay, we're plotting here. Here's the entry. Here's the exit. Here's the take profit. Boom, it's done. It's finalized. And this is how it helps us paint and see the full picture. So when it comes to my 3 favorite techniques, those are the bulk of them. I like the moving averages, the relative strength index, and I think a risk versus reward ratio is essential. Now, obviously, there are the basics here, and I wanted to have one honorable mention. I wanted to have this as the honorable mention because I thought it was just a little bit too basic to say, hey, this is some advanced technique. But just simply knowing how to plot your support and resistance lines is essential for different kinds of candle chart formations, knowing where support and resistance is. And so the way to do that, as this honorable mention, is by going right up here, clicking on this trend line. And then from here, we can plot different trend lines, and we can do whatever we want with this. And, we can connect the dots, right? And just place these wherever we want. So if we want to just know, hey, there's support and resistance here. You can see over here, I drew a little pennant where there was a little bit of a squeeze happening. We can take these lines and we can draw them over here, and we can plot them as we see fit. So when it comes to, like, this honorable mention, I know it's a little bit basic, but just understanding how to place these trend lines and put them on your chart in the first place is going to be a step in the right direction. So with that being said, everyone, I hope all of you enjoyed this tutorial here today. We have a lot more content coming your way. We love making these different kinds of tutorials on TradingView and Coinbase and all the different crypto platforms that exist out there. So as we continue to pump more out, let us know what you all want to see next. We love reading through all of your comments and seeing what all of you are requesting, because ultimately that's how we make the best content. So stick around. We got a lot more coming your way. We have all sorts of podcasts, market updates, tutorials, and a whole lot more. So make sure you hit that like and subscribe button. Check out some of the links in the description down below, and we'll see all of you at the same time, same place very soon.